Taiwanese index now trading with gains of over 1%. After being stuck in Barbados for nearly 3 days due to the Category 4 Hurricane Beryl, the champs touched down in New Delhi earlier this morning.
On the way down, we should not break the recent low of 24,056.
So the new lows have crossed the 1 crore mark in this quarter.
24,340 is where the Nifty is starting at. We got the market open on our hands.
We expect that these heavy-duty trucks and light and medium-duty trucks, they will grow much better in the balance part of the year.
We have SEBI, we have RBI, we have digital tracking, we have everything perfect.
We're holding up in the green, but we've come off from the highs in the last 30 minutes.
Our view is that technology is only as good as its use.
So it always seemed to me that it would be a little bit tougher to come down as aggressively as the markets were pricing in.
Well, for the markets, it's a 54-point uptick on the Nifty.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far, and the market is up 40 points. It is a quieter day on the indices, frontline indices, as compared to what we've had over the last many trading sessions, but very, very stock-specific activity. We are coming to you live from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, good afternoon.
Hi, afternoon. It looks like all the excitement is reserved for the Indian cricket team and the celebrations in India.
Well, that's right. And I think the Nifty Bank is the one actually that's very, very quiet in today's trading session. It's not moved a single point. And that's despite ICICI Bank being up 2.5% because HDFC Bank is offsetting all of those gains. But quite excited about the evening. The Cup's coming to Mumbai. So,
are you going to be there?
No, I'm going home.
Rima's going to be there.
At this age, the minute you see a traffic jam, you're going to run in the other direction. I think you've got to be in your 20s to be there.
But let me tell our viewers that our team will be there, and we'll get you a preview. I think they're supposed to land here in Mumbai at about 4 or so. And then, of course, it's a full program all the way to town, which is the southern tip of the city. There's an open bus parade. And then, of course, there's a small ceremony at Wankhede. So there will be that sort of coverage which you will find here on the channel. Now, just a quick couple of points before we go any further. You've got the Nifty. As I said, the frontline indices are a little quieter. It's very stock specific. But I have to say, even though it is quiet, the Nifty is trading above its 20-hourly average. Which is it's holding nicely above it with this small 30, 40, 50 odd point gain that we have. Sectors which are leading, pharma and healthcare. I just saw a flash on Zydus Life, 4% higher. There's an approval which they've got from the US FDA, and we'll sort of come back to that in a bit. But it's not just Zydus Life. There are many names which we'll talk about. PSU, CPSE index, the last I checked, was up about 1%. Real estate index is up almost 1%. And of course, mid caps and small caps, they're definitely doing better than frontliners. And those indices have got a 0.5% plus kind of gains there as well. So it's very... there's very little sectoral move, especially except maybe a real estate. It's scattered, more scattered as compared to the concentrated moves we're getting used to seeing every day in this sector or that sector. Rima.
You forgot to say IT. IT is also contributing on the way up. So
because I knew you were going to say it.
So you just decided to speak about pharma and ignored IT. But, IT is also having a pretty good session. The Nifty IT index is a gain of more than 1%. For the week so far, it's up 4.5%. And in the last 1 month, it's a 17% gain on the Nifty IT index. And now putting up that earnings calendar for you for IT because it's 1 week away. We kickstart the IT earnings next Thursday, post-market hours with TCS. Then you've got HCL Tech, on that following Friday. And the week after that, the others trickle in, like Infosys, Wipro, and some of the mid-cap IT names. In terms of banks, the the Nifty banking index is now back in the green. It traded in the green for the first 1 hour of trade. But after that, if you pull up the Nifty intraday of the bank, the Nifty bank was in the red. At one point of time, it had dipped 300 points, but now it's back in the green now. So that's a positive, a 300-point plus recovery from the day's low. And it's ICICI Bank, which is batting for the large cap banks. ICICI Bank is pretty close to its 52-week high. Kotak Mahindra Bank too is seen some buying in the last some time, and HDFC Bank continues to sulk. Bajaj Finance is under pressure despite a strong Q1 update, so that's a bit disappointing. You spoke about pharmaceutical names, and they are seeing some intraday buying. And defense, that ticker is showing you how Mazgaon Docks, Cochin Shipyard, Garden Reach Shipbuilder, these are stocks with gains now approaching close to about 20%. And a quick word on the cues to watch. Well, cricket aside, the Nifty weekly expiry. Remember, US markets are shut today, but in terms of economic data, the initial jobless claims will be out at 6 p.m. India time, and the Vodafone price increase, the tariff hike, is effective today.
All right, let's get straight then to Mitesh Thakkar, who's standing by. Mitesh, it's a quiet day on the Nifty Bank. The Nifty is still doing okay with a gain of around 60 points. But we were unable to build on to those gains. We started off with a gain of around 40 points. At one point of time, we were up more than 100 points. But I think that 24,400, 24,450 is appearing like a bit of a resistance zone. Your trade on the index, and what's your stop loss on the downside?
Good afternoon, Ajay. So I think today it's a quieter day, but to me it's a sectoral rotation day. I think today IT is the one which is leading the rally on the upside, or which is giving good support to the index. So I think that is not a very unhealthy thing. It's actually a good thing. So but I won't really worry about the fact that the index hasn't gained much, but maintain a long bias. On the stock side, Persistent is a buy with a stop at 47.10. Look for target of 48.50, 4900. And that apart, I think Laurus Labs looks like getting into some kind of an up move. So that's a buy. Keep a stop below 48 here, look for targets of 470.
Laurus Lab and Persistent Systems. Persistent Systems amongst the mid-cap IT is likely to post the strongest growth at close to about 5% on a quarter-on-quarter basis. But now let's get you a CNBC-TV18 exclusive after sources say that over 100 DGCI notices have been given to insurance companies are now defunct. Tim C joins in with the details. Tim C.
Well, that's right. What we are given to understand from sources is that the insurance sector is set to get GST relief. Over 100 DGGI notices worth 20,000 crore rupees will now become defunct after the recent GST Council changes that have been now notified by the government. Companies will also get the demands that they have already paid against these notices as ITC refund in their ledger. Just to remind our viewers that 53rd GST Council has notified clarifications with respect to co-insurance, reinsurance, treatment of wreck and salvage, etc. in terms of supply. And remember, insurance companies were facing the heat of these DGGI notices. Since last 2 years, the Directorate General of GST Intelligence was claiming dues since July 2017 onwards. And now all these notices are set to get suo motu defunct, since the clarification says that these will not be considered as supply. Thus, no GST is submitted that is being levied on these companies.
Dimsi, thank you very much for that. Deven Choksi is now with us on the show. Deven, afternoon. Thank you for joining in. Wanted to get your thoughts in on Bajaj Finance. The numbers look very good, and AUM growth of more than 30,000. The new loans have gone up 10% on year-on-year basis, and they've crossed the 1 crore mark for the first time ever. And even that RBI ban was lifted, I think, on 2nd of May, and that helped Bajaj Finance with the momentum. But the stock is under pressure. What explains that?
Yeah, Rima, good afternoon. Well, I think the market probably judges the companies based on the valuation. And if you look at the last 12 months, trailing 12 months valuation, it basically states that I think it is about 5.5 to close to 6 times price to book value. That's where probably I think the stock is not performing in the marketplace, whereas fundamentals remains absolutely strong and convincing. Year over year, 30% kind of a growth is continuing, and they have the best ability to manage the risk, which is also significantly important from a perspective of looking at the lender's book. On the other side, well, despite of challenges, I think they've been successful with the liability franchise. So all in all, put together, I think fundamentals are never questioned. On the contrary, I think the Bajaj Housing Finance, which is now getting into the public market, will also, I think, start getting reflected in the books over there. All in all, put together, I think the strength remains in the company. I would think that the market should soon re-rate this particular company and start giving the price appreciation, which to me, I think, looks absolutely clear at current levels.
Okay, all right. Thanks a lot for that, Devin. Well, let's focus on some of these cement companies and let's understand why some of these companies have come in for pressure today. Well, if you look at it in the last few days, actually, some of these cement stocks have been buzzing on hopes of consolidation, hopes of, better pricing that's coming about. But in today's session, actually, cement is seeing some selling pressure. Ramco Cement as well is down close to around 2% odd. Let's give you a few reasons. First off, weak pricing. Pricing is under pressure. It's been under pressure for 2 straight quarters. Quarter 4 of the last last fiscal, that's quarter 4 FY24 was weak. Quarter 1 FY25 as well was weak. And now we have the monsoon, so pricing pressure is likely to remain weak. In fact, in the month of July itself, we did see that there was some trepidation on pricing. And in June, prices were down by 1 to 1.5%. On a sequential basis, if you compare quarter 1 of this fiscal with quarter 4 of last fiscal, pricing is down by around 2 to 2.5%. On a year-on-year basis, the prices are down by around 5% odd. And dealers are hoping for price increases, but that's not really coming about. So that's on pricing. Point number 2, volume growth is a little bit soft in the first quarter of this year because we had the general elections. So the growth actually was only around 3.5% odd. If you compare it with quarter 4, growth was around 9-10%. Even after the last full fiscal, it was up by nearly around 9 to around 10% odd. So in relative terms, the growth on a year-on-year basis is a little bit softer. But point number 3, you put both of them together. That is weaker volume growth as well as weaker pricing. Well, it will result in EBITDA per ton coming in lower. And Jefferies has put a couple of data points to it. They're saying on a sequential basis, EBITDA per ton will be down by around 130 rupees. And on a year-on-year basis, it will be down by close to around 40 rupees. Point number 4, well, there's a scramble for market share. The larger players are getting bigger, but they want to maintain their market share. So they're consolidating, buying out the smaller entities. Smaller entities, either they sell out or they'll struggle. So you're seeing some consolidation, but there's a push of volume, and that's what's going to keep pricing under pressure. The street, though, is waiting by for some kind of consolidation in the sector. A couple of reports suggest that maybe there'll be a couple of assets that will be picked up. My ear to the ground as well, I believe there are a couple of assets that will fold up in the next 6 to around 9 months or so. In the last 6 months or so, though, you have seen those 3 big deals that have taken place, and all of them in South India. So let's see whether or not there is more in store. But for the time being, weak pricing, tepid volume growth has kept these stocks a little bit subdued today.
You know, in the paper today, I think there was one story about Ultratech Cement, which is now once again in the race to acquire Orient Cement.
That's right, Rima.
One of the pink papers reported
it. That's something that's been reported for the recent past, and logically, actually, it sounds, on the cards, if in case. But though we have the Orient Cement management that keeps denying it, everything is good at a price. So maybe, when we first interviewed Orient Cement, when I had gone to their unit in Hyderabad around 15 months or so ago, at that time they denied it. But the stock price was around 110, 120 rupees odd. Currently, the price is around 311. At a price, everything could happen. So let's see whether or not this deal is waiting by to happen. Orient Cement folding into Ultratech Cement. In the last year or so, various papers have reported either the Adani Group or Ultratech will look to gobble it up. It's a good asset. They've been struggling with volume growth. So let's see what happens. But that's one of the lone rangers that's up close to around 1.5%. Let's get in, Devin, into the conversation then. Devin, we put out a couple of reasons why cement stocks are under pressure. How would you play this theme? Will you look at the smaller names, or do you believe that the larger are going to get large? So you rather stick to them. They have cost advantage, pricing advantage, volume advantage. Your take.
Yeah, Nigel. Clearly, the advantage goes to the larger player, and I think that's where I think your money should be. On one side, you have Ultratech, and other side, I think Adani Group of stocks, the cement basket. I would think that these 2 large players, along with Shree Cement, probably are the ones I think which should be in your portfolio. These are, I think, the smaller ones. Clearly, they are also enjoying the advantage, I think, as far as the inorganic growth opportunity is concerned. Look at likes of Ultratech Cement. I think it's putting at a EV to ton of around $260 to a ton kind of a valuation. Whereas I think the smaller and mid-sized companies are putting at 130 kind of a dollar to a ton. So from that perspective, I think they have got a clear advantage in form of arbitrage in form of the acquisition, which would be, I think, a significantly advantage to such companies. In my viewpoint, I think one should stick with the larger companies. Also because of the fact that the pan-India presence, I think you are beating the regional pressures very significantly. And that's where probably I think the profits are made. So to me, I think the larger players makes more sense in the
some of these defense names, Rima was reading out names like Mazgaon and Cochin. We should have those up. Cochin Shipyard is up 300% in 6 months, this year so far. And I was just sort of going and looking at who owns it. There's one mutual fund who owns it. That's Nippon India, 1.6, 1.7%. And but the public owns about 20%, but no prominent shareholders. Some 4 lakh shareholders. I mean, overall. And of course, the government of India is the promoter. Just 300%. And it's not as if it's kind of sort of. It's done well in 2023. It's done fantastically well in 2022. Was 200, I think, rupees or so. Close to 200 rupees it ended 2021 at about 180 bucks. It's at 2,700 rupees now, Cochin Shipyard. And I think something similar should be the case with Mazgaon in terms of very thin institutional ownership and, of course, a large number of retail shareholders. Devin, any thoughts on these names? Defense has done well, but even within defense, I mean, I think some of these shipbuilders, outstanding performance.
Absolutely. I think they have the advantage of having the larger visibility of order book. You're having in both these companies' case, I think, a visibility of at least 2 to 3 years of order book, which is continuously pouring in. So from that perspective, the sustainability of the business momentum is going to be significantly important. It's going to be high for these companies. On the other side, they have the ability to deliver also, but I think that is not as high as I think the way the premium valuation has been given. So in my viewpoint, I think 15 to 20% kind of a growth is a natural growth for them to assume because of the larger order book size that they have. But whether they would match the market expectations, where the market has given the significantly high amount of premium valuation, I'm not too sure. I would remain invested, but I think to buy fresh in the market, probably I think would require some moderation in the price. That would be the better time to buy, at least I think on the downside of the risk management is concerned.
Garden Reach Shipbuilders is up 97% in 1 month itself. So, that's, from election day to now, it's 100%, 97% return on Garden Reach Shipbuilders. But in the last 1 month, the good news has also come through, right? I think one of them got a Navratna status, that Cochin Shipyard got a large order win of close to about 1,100 rupees. It was an export order. And, plus the government's push towards indigenization keeps the interest very much high in these shipbuilding stocks. So, that run-up, that eye-popping return continues over there. Devin, any thoughts on Kaya? Kaya is not a stock we've ever spoken about, but with this exclusive partnership with Marico, you suddenly feel that, Kaya is going to come into the limelight. Is this a stock you've looked at? How does it look?
Honestly, it's not under the coverage, but obviously we keep tracking. So from a point of view of, I think, looking at this particular company, I think the advantage that the Marico's reach, distribution reach, is going to play a role, wherein they are basically collaborating with Kaya for the purpose of distributing the personal care product portfolio. And that's where probably one can argue that this company would have advantage of Marico's distribution reach in form of, I think, getting higher amount of sales reported. But yes, that's a potential. I think how big it would be, I think the time will tell. Since we don't have the coverage, won't be able to deal in detail about I think the values and the valuation at this product.
Okay. All right. We'll, thank you for joining us, Devin. Good speaking with you here as always on CNBC-TV18. You were mentioning Garden Reach shipbuilders. There is, again, I'm just looking at the holdings here for Garden Reach, right? No FIIs. There's one mutual fund, which is HDFC mutual fund. They own just under 5% stake. And Mr. Ramesh Damani owns 1% of the company. That's the latest shareholding, the March shareholding, not the June quarter shareholding, which I think should be out as well. So it's done phenomenally well. 30,000 crore market cap. So 1%
you're calculating, right? 300 crores in one stock.
So it's just been so big wealth creators, really, some of these PSU names over a period of time. We'll take a quick commercial break here. We'll be back. Jigar Mistry of Buoyant Capital is going to be with us on the other side. Stay tuned. Welcome back. You got markets which are up about 30 points on the index, and it's a small gain today, but I think it only is. I mean, it's not a small gain for the Nifty, but I think there's enough and more happening in the broader market. Just a few new names. Honasa is up 8%. I don't know if this is a new, fresh move, which is happening as we speak. I think it is 220 or so. Our stocks were about 460, and it's moved up to about 470 right now. Nelco is another mover. It's up about 10.5%. It's really broadened out with volumes. 877 on Nelco. That should come up on your screens. There's AstraZeneca, which is up 11.5%. Lupin started higher, of course, but it's kind of at the high point of the day. 7.5% on Lupin. I mean, that is a really big gain that you have on your hands there. You got Skipper Limited, which is up 6.5%. Rate gain is up 6% or so. We saw that big move in TBI Con after initiation. Rate gain has been sulking for a while, but I think it's up today. Prime Focus, I highlighted this yesterday, is a complete underperformer, but had a big move yesterday, and I think it's up again today, 6-7% right now. So this sort of render animation and special effects for lots of Hollywood studios. Fairly large operation, but stock's not done anything at all. Traxon is up about 6.5%. And Advanced Enzymes is another one which is up about 6.5%. So actually, even as we go into the last 45 minutes of trade, I mean, I think there are more and more movers coming through in the broader markets. Jigar Mistry is with us, co-founder of Buoyant Capital. Jigar, good to have you with us here. Thank you very much for your time. So before we get to quick views on the market, I mean, if you want to start with that, just preface your answer there. But what I really want to ask you is, what have you done lately, Jigar, in your portfolio? What have you added? Because flows are coming in.
Yeah. Good afternoon, Prashant. Thank you as always for inviting us. See, I think we can keep talking about valuations and how sort of that is, looking a little bit off, earnings are not catching up. But we are doing the numbers as we are speaking. And if you look at the lows of COVID, then the total retail ownership of each and every company in India, if you take market cap times retail ownership, total that number up, that was at around 8 lakh crores, right? 8 trillion INR. If you look at the latest numbers, that's upwards of 60 lakh crores, right? So 60 trillion. So retailers, 14.8 crore demat account holders, have cumulatively generated a net wealth. Some of it might be inflows, preface it, but a net wealth of in excess of 50 lakh crores in under 4 years. Just to tell you how big that number is, the total household savings in India, including gold, real estate, everything, equity ownership, is 14 lakh crores a year. So net, you are essentially talking about retail having made so much wealth, and predominant of it is in small and micro cap space, that each and every opportunity is essentially an opportunity to buy and add more. We have had a seminal event in the decade, transpire last month with BJP not getting as many seats as market expected them to. And that was brushed aside, and we ended the month like 7% higher. So I think just because of the net sort of zeal and enthusiasm with which retail seems to be approaching this, it's just taking a few sections of the market really high. We are using this opportunity, I think we spoke last month as well, to sort of dial down the risk a little bit. We were almost 63% in small and mid caps by May 2023. Like everybody else, we have also had a phenomenal run, and we are taking this opportunity to bring it down closer to 50-odd%. If the market continues to remain as giving, then we might sort of bring it down a little further, closer to 40% over the next few months.
And using that, so when you bring it down, allocating it to large caps, I'm assuming, right?
Yes, Prashant. So both things, businesses that we think have gotten fairly valued, we are taking this opportunity to get out of them and getting into businesses which are a lot more interesting. For us, pharmaceuticals is an interesting space. BFSI continues to remain an interesting space. Auto ancillaries is a space that we have been looking at it over the past few months or so.
Out of the three areas, what have you added?
Added all of them, Prashant. And also, if I look at our 3 months numbers, we have added a little bit more on IT as well. But although I would want to believe that, given that, it's just a valuation re-rating story beyond the point, right? Earnings are unlikely to run up in a hurry, as prefaced by sort of the hiring slowdown that we are seeing. But yes, relatively speaking, those businesses were not all that expensive. So we have been adding all those and a little bit of IT as well.
Jigar, in the past, I remember you saying you like Cyient and eClerx. Those were the two mid-cap IT names that you used to like. Do you still hold them, or are there new names that have attracted you in IT?
Part of it, Rima, we do hold. Also, Allsec was another business. So Cyient, eClerx and Allsec, yes. So those were the small cap IT names we used to own. I think we continue to own some bits of it, although not as much Cyient now, but eClerx and Allsec we do. But we also added a lot of large cap IT over the past 3 months, just relative to how the businesses were stacking up. So yes, to your question, we do own some part of those small cap businesses.
And in large cap IT, is it the larger ones like Infy, TCS, or the potential turnaround where say a Wipro or a Tech Mahindra, there has been a leadership change, the valuations are relatively less compared to Infy, TCS?
Historically, Rima, it's been HCL Tech and Infosys for us. Oh. So that's where we continue to have exposure at the moment.
Okay, all right. Hi, Jigar. Good afternoon. Good to see you in. I think I've asked you enough about metals, right? Let's keep that one aside. Let's wait for November, when we see some more action, you get that trade right and you're dancing away to the bank. Otherwise, it's a difficult one. So let's keep metals aside. I want to ask you about cement, because we have chatted a lot in our friendship, in our professional relationship as well with regard to cement. Now, there have been 3 big deals that have taken place in the last 6 to 8 months. Kesoram, we were on top of that. Penna. And then we had Ultratech going ahead and buying Mr. Damani's stake in India Cement. Who would have thought, right? All these 3 assets. I think in the last 10 years or so, we heard it repeatedly. Now there is talk that there is a couple of more assets getting folded up. What is your view? What's well placed? You have a couple of these names, Orient Cement, Sagar Cement. Valuation-wise, yummy. That's always been the case. Orient Cement actually, even after the run-up, still it's a little lower than replacement cost. How would you approach this theme?
Nigel, so sort of what we used to say is the worst place to be is a mid-sized cement company, right? Nobody would think of acquiring you, and you would think of acquiring other companies which the markets won't like, given the amount of debt you would have to take up. So it's either great to be like a very large cement company and then you would want to gobble things up, or you would want to be an extremely small company with sort of inferior logistics and sort of yield to market and the logistics part not being all that great, and then you would want to sell out. I think if you chart out the EBITDA per ton of cement companies over the past 15 years since we have been talking, Nigel, I think that's hovered in and around that 1,000-1,200 rupee per EBITDA per ton numbers. And I think because companies kept on adding capacities instead of acquiring them, they created a situation which allowed, continuous growth in volumes, but no growth in profitability. So eventually, if the larger companies say enough is enough, let's acquire whatever can be acquired, and then we will go around, looking at taking price increases. Because eventually, even in telecom, right, that's what it happened. Once it decided to a situation that there are now only 3 players, and our aspiration is to reach the lower end of, say, Africa's ARPU range, now we'll start taking price increases. So eventually, if all of these smaller capacities do get acquired, demand in the next 4 or 5 years rises to a level which starts making sense for them to take price increases, then we can look at going towards that 1,500, 1,700 per ton EBITDA. So I think the better place to be, because smaller companies would still be, acquisition premium if it's a binary trade, right? If they do get acquired, then these valuations are very attractive. If they don't get acquired, then even $100 is a lot more expensive. So the better place to be is certainly not mid cap, may not be all that small cap, but larger cap cement names is, I think, where we have reasonably decent exposure, Nigel.
Okay, fair enough. Jigar, coming back to the 3 areas, right? Pharma, What do you like? Auto Anks, what do you like? And I think you said the third one was financials?
Financials, yes, Prashant. So, sort of the whole GFCF to GDP sort of rising trajectory that we keep discussing, there were areas which sort of we played at, right? So if that GFCF to GDP do end up increasing, then it all starts with OEs. So, you have sort of the big Siemens, ABBs, L&Ts of the world do very well in trade first. Then you take a step back and you come to EPCs. And there are EPCs, the working capital is something that you need to look at. And there are some plays which are still interesting there. Then you take a step back and you look at all the suppliables, right? The consumables like cement, cables, pipes, and so on. Then you take a step back and you look at all the, say, financiers of those trade, which is housing finance companies, which I think we have a lot of exposure in housing finance companies. And you take a step back and then you look at all the corporate banks. So SBI, Axis, Bank of the Lords, Kotak Mahindra Bank, even HDFC to some extent, and ICICI obviously. So I think this is the way in which I think the numbers have stacked up. We have exposures across the board here, other than OEs. OEs we think have gotten really ahead of themselves. And those valuations, you can jump in and say, okay, it doesn't change. But if you do a reverse DCF, it's difficult to justify valuations on many of them. But across the value chain, I think there is a lot of interest. On the second part, which you mentioned, which is automobiles, given the disruption that we are looking at, it's better to stay with a little more, the auto ancillary side of things rather than the OE side of things. So that's where we find our largest exposure. A lot of auto OEs are also getting diversified and getting into some amount of railway work, because at the back end, they're able to cast and forge things along the way. So that's where we have reasonably good exposure. In the pharmaceuticals chain, I think the older names remain, but increasingly, there are a few niche plays that are coming up. In contrast media is where we have had a reasonably decent exposure on an incremental basis. So this is how sort of...
Jigar, which one?
Sorry. The contrast media. So there is this company called Indegene. Bluejet. Bluejet is an emerging company in the contrast media space. And Indegene is also an interesting space, but it's difficult to classify it, whether it's an IT company or a IT company in a pharma business. So you can split it either ways, but those are two the interesting names that we have come about to.
Okay, Bluejet and Indegene, right?
Yes.
Got it. Next time we start, our next conversation will start with those names.
So Indegene is one of the recently listed companies, and which is why he said it's a mix between pharma and IT, because they provide digital marketing to pharmaceutical companies. So their clients are pharma companies, all the pharma companies, but they have a platform, a tech platform.
Yeah.
So which is why it's at the intersection. 539 is the current market price, and the price band or the issue price was 452. So the stock has done pretty well since its listing in May. So about 2 months to go.
But in a market like this, I would say it has not done so well.
25%,
which means there could be an opportunity, and I think that is why Jigar is.
Maybe.
I'm assuming that's why Jigar has gotten in. By the way, who tracks this then, Ekta or you?
Ekta.
Anything less than 20% in this week is not doing all that well. So.
All right, Jigar, great speaking with you, but we'll sort of dive into these names and more names next time. Appreciate you joining in, and it's always great speaking with you. I think 10 points, by the way, the markets come off. We started with a 50-point gain on the Nifty, 24,300, but we're up just about 10 points now. So that's the picture. We'll take a break, but we'll leave you with some comments from Ramdev Agarwal, Chairman and Co-founder at Motilal Oswal Financial Services. And this is essentially his thoughts on markets and, of course, what he's expecting from the budget. Actually, it's a wish list, not expectation, but a wish list. Listen in.
Year after year, for 44 years, I have seen this market growing at... I didn't know that it is 16%. I thought it is 15%. This is a 15% country. India is a 15% country. So I have seen, like every 5 years it doubles, like from 40,000 to 80,000 it has become in 5 years, exact. So it's about 15%, and longer term is also 15-16%. So there is no reason to believe that going forward it will be anything significantly different. It might become 14, it might become 16. So if you go at 15, I mean, let's keep the base rate 15. In 5 years flat, 2029, you'll be 1,60,000. Retail, which is, see, in 1.4 billion people, at least we should have 500 million people in the market. We still have only 160 billion or 100 billion. So this journey of inclusive development of the markets, because the risk capital is going to come from not from the top end of the population. Risk capital will come in a truly distributed way from across the country, and that is the revolution which is on. I don't want any tax concession for sure. It must be made very, very fraction free. The capital market should be the most friendliest capital market in the world should be India.
So completing the loop on the budget.
Yeah.
You say no changes. That's
broadly,
from a taxation perspective.
We should not be changing. Yeah, I think we are in a very good equilibrium. I would expect that there should be some boost to the consumption. The guys who are not paying tax, in any case, you have no control on. The guys who are paying tax, you can reduce that. Like I would say, up to 12 lakhs, no tax. I'm a farmer, no tax till 12 lakhs. मतलब उसको he should not know where is the income tax office like. 12 lakhs rupees means a lakh rupees. All the PSUs, they were discarded for, I would say, 10 to 12 years or maybe 15 years. They literally came to zero performance 3 years back in our wealth creation study. And so it is making up for the last 15 years of lost valuation. I mean, things came from, say, 12, 13, 15 P multiple to 2, 3, 4, I mean, low single digit P multiples. Like quality, I don't know, even now it must be single digit.
Yeah, 8.5.
Yeah, so it was, this is despite doubling, so it was 3, 4 P multiple. Your HPP house is still at about 5, 6 P multiple or 7 P multiple. So clearly, the PSUs were depressed beyond anybody's imagination, and now under this government, I think the PSU profit performance is also very good.
Welcome back. Well, the markets have flattened out. Maybe there's an element of, expiry that's playing out here as well. That's why the markets have come off considerably from the high point of the day. Dredging Corp, well, that's got a contract worth 150 crores from Kochi Port Authority. So that's locked up close to around 5% odd. It's up today, but I think if you pull up the last few days as well, that's been one of the big movers for the time being. We have some fundamental news, so you can digest that piece of news. Well, let's get in Mitesh Thakkar. Mitesh, the markets have flattened out. The Nifty's in the red, by the way, as we speak. And who slipped in the last few minutes? So let's get a few of those stocks. I think Reliance has given up all of its gains. That was holding one end up, so that slipped. And HDFC Bank is now down 2.5%. Your view first, Mitesh, on both these two names, Reliance as well as HDFC Bank, and then you could give us your other stocks.
HDFC Bank, I think this maybe even 10 rupees lower is a good entry point. Breakout about 1700 was very good. Now we are seeing what I think is a pullback, and ending closer to about 1700 would be an excellent entry point. So to me, 10-point lower, buy with a stop at 1694. Look for a retest of 1800 plus levels. Reliance also something which I'm positive upon. After that big rally, I think the stock is still consolidating, and you might get to accumulate it slowly. With 3075, 3060 is the preferred buying zone over there. So stay positive. I think very clearly nothing wrong with either of these stocks.
Okay, and your other picks then, Mitesh?
Yeah, on the BTSC side and STVT side, I have one buy and one sell. Pidilite is slightly negative, so we'll take a STVT over there. 3111 being the stop loss, and one can look at a target of roughly around 3060. While REC will take a BTSC with a stop at 570 for targets of 584.
Got it. Okay, thanks for that, Mitesh. Well, let's focus on ITD cementation. Well, the stock is under pressure in today's trading session. So let's give you first the news piece why we're focusing on the stock. Because the promoter entity, Italian Thai Development Public Company, they're exploring a potential divestment of their stake in the Indian listed company. How much do they own? When they own nearly around 46.6% stake, which even after this fall is valued at around 4,500 crore rupees. But why is the stock down, right? Normally, if a promoter entity is coming to sell, you'll be quite excited and the street could look to buy. Because the first point is that the street has already bid up the stock. In the last 12 months, the stock is up 200%. Last 1 month, it's still up close to around 30%. And year to date, it's up close to around 80%. So there's been a considerable run up in the stock already. Point number one. Point number two, the promoter entity, that's the parent that's looking to sell stake, Italian Thai Development PCL. They listed in Thailand, by the way, and the market capitalization the last time I checked was around 800 crores odd. The stake that they have in the Indian company is worth nearly 4,500 crores odd. The problem for them is they have been reeling under some debt pressure and they've been reporting losses as well. So maybe their bargain power is a little bit lower. So that's what the street is a little bit skeptical on, whether or not they can, bargain for a higher price. And point number three is how much is in the price? After the stock has run up to this extent, the management has been positive. They're guiding for revenue growth of 20%. They're guiding for margins of around 11% because the legacy issues are behind them. So fundamentally, that looks good. And give and take everything, Equaris had put out a note and they're saying the PAT should go from around 270 crores to around 470 crores. But at 9,000 crores market capitalization, it's trading at nearly around 20 times, which isn't immensely cheap. So put all these factors together, the run up in the stock, the probable, the limited scope for the promoter entity to bargain for a higher price, and valuation is not very, very supported. The stock is down close to around 15% after the big run. Let's get in Sudeep Bandyopadhyay from IndiTrade Capital. Sudeep, you heard what I had to say on this one, ITD cementation. It's been a rank outperformer. I remember visiting the management in November 2022. The stock was 120, 130 rupees. And even after this fall, it's closer to around 480 rupees. What's your view on it? Do you think that could be, enough participation, enough interest for it? How would you approach the stock at 480?
Well, I think, Nigel, you're absolutely right. As far as company is concerned, they're doing very well. And the way things are, poised, they will continue to do well. There is a significant tailwind. And I, to an extent, agree with the Equaris report. Performance going forward should be even better. The legacy issues have been resolved to a great extent. So as far as the Indian company is concerned, I think the future is good. Now, this promoter selling stake is a bit of a kind of a challenge, and the pricing pressure on the market we already have seen. Unfortunately, because the parent company doesn't have too much of a bargaining power, and they are kind of desperate sellers because I believe their debt is a couple of $1 billion, and probably they need to sell this stake to part settle that debt. So under the circumstances, it will be a kind of a fire sale. That's why probably the price has come down. But I'm sure there will be enough and more interest in buying the 46-47%, which the promoter entity is holding currently. And once this issue is over, hangover is over, I think the stock will continue to do well. It has gone up, but it has potential to go up even further from current levels, sheerly based on performance.
Okay, Sudeep, stay on. We can't help feeling the FOMO because the party is currently getting underway for the newly crowned T20 World Champions. Team India, remember, has already met with the Prime Minister and they must be on their way to Mumbai. And after that, they're scheduled to hold an open bus parade. Yash is now standing by at Wankhede Stadium. Yash, what's the mood?
What a view.
Well, Rima, that's correct. I am here standing at the Wankhede Stadium. This is exactly where the celebration of that nail-biting match which happened on the last Saturday against South Africa will be celebrated, and with a lot more zeal, I am sure. The celebrations are scheduled to start at about 5 p.m., 5:30, when that parade, which starts from Trident Hotel, which is just about 5 minutes away from Wankhede Stadium, will start proceeding towards the stadium. But when I was entering into the stadium, I could see fans, gathering already about 3-4 hours prior to that actual time of the event. There are a lot of colleges here around in Churchgate, and students from those colleges have come here in large numbers, bunking their lectures, but making sure that they mark their presence by coming here, witnessing this very, very special event. Behind me, the stage that you see, which is being set up right now, is where the facilitation ceremony will happen for Team India, our heroes who've sort of gotten that beautiful trophy, and they've brought it back to India, being the World T20 champions. And it's taken multiple breakdowns, multiple emotional moments, multiple failures, about 17 years of wait for the World T20 trophy, 11 years of wait for an ICC trophy. But today it's all happening here. It is that culmination of that match against South Africa, the final match, that the trophy is going to be here. People have started gathering, the fans have started gathering in the stands here at Wankhede, and very soon we'll have this place that you see currently behind me, full of fans coming from all corners of the city with the parade, independently taking their seats, all ready to witness that historic moment when Team India, with that beautiful trophy, comes here for the celebration today evening.
Beautiful trophy, and even I think that 125 crore check. Don't they get that also today?
That's of course there. But I'm not sure. If you put the 125 crore check to the trophy, what's going to be more precious to the fans or the team?
Yash, keep your eye on the ball. You sounded quite excited about people who are bunking and coming to the stadium. Just concentrate on what you're there for.
Well, Nigel, it's this place, Wankhede, which can get any cricket fan excited, and I'm no different to that crowd today.
Absolutely, Yash. Lucky guy you are. Waiting to catch up with you tomorrow and in fact hear about the experience as well. But we'll keep coming back to you, Yash. It's a beautiful evening to remember. Well, for the time being, I think we'll slip in a short break, come back, we'll run you through market close, and maybe we'll try to get Yash as well and a couple of updates from the stadium itself. Stay with us. Welcome back. Well, Avenue Supermarts has moved to the low point of the day. That's one of the big losers actually in the last 20 minutes or so. It was holding well in the green and now in fact it slipped. So Avenue Supermarts, good update is what we saw yesterday. The problem is the stock is not very, very cheap. Sudeep is still with us. Sudeep, what's your view on this? Avenue Supermarts, if someone got allocated in the IPO and they held on, wow, it's been a dream stock. But what do you do at around 4,700?
Well, I think you wait and watch. I don't think it makes too much sense to add at this stage. The performance has been okay. In fact, earlier quarters it was not that great, but now things have improved quite a bit. But I think the real challenge is coming from this online delivery models, whether it's a Zepto or a Blinkit or a Instamart of Swiggy. So I think the Avenue Supermarts, DMart also have their own online platform, and they're also trying to compete. We have to see how things pan out in this entire grocery general merchandising space. It's just too much of activity at this stage, and we'll have to wait and watch. So while the company has done remarkably well at this stage, I won't recommend addition to the stock.
Sudeep, I'd asked Jigar Mistry, who joined in earlier, about cement. What's your view? Orient Cement, the street believes that's the next candidate on the block. We'll have to wait for confirmation on that front. Yesterday and day before, there was massive delivery-based buying on that stock. From today's high, actually, it's come off close to around 7%. At around 300 rupees, if not the deal is on, how do you approach it?
Well, I think Orient Cement still looks good, even at current price. You absolutely correctly said the replacement cost is about a shade lower than probably that $300 per share valuation. And yes, there can be a deal in the offing. So that will completely change the dynamics. But beyond Orient, I think Sagar Cement, to my mind, should be the next target. And at some point of time, I think that stock is also ripe for some kind of corporate action. So between Orient, Sagar, and maybe even Ramco, I think some transaction may happen in the near future. I think both the big boys are looking at acquisition. Now, the challenge is for the smaller players, it's an extremely inconvenient situation. Either they get acquired or they struggle with these big boys in the market, where their cost disadvantage will become more and more apparent as the days go by. So at some level, probably it makes sense for them to be acquired at a good valuation, unless they're able to themselves scale up, raise money and go and acquire other smaller companies. Now, if that is difficult, I think the acquisition will be the fate of some of these companies in the near future.
No, got that. Just want to make a quick mention. By the way, markets, of course, are up about 14 points. So they're off the high point of the day. But we've come off from the day. The day's high was early on, at about 10 o'clock. 24,400 was the high. And we'll basically close about 100 points off the day's high today on the Nifty. But absolutely no dearth of broader market gains. And I think nearly 1,500 stocks are higher. You got about 1,200 stocks which are lower. But the momentum of volume-led sort of gains is clearly and solely with what's happening here on the gainers list. Honasa is up 15% now. It was, I think, we spotted this when we started, and it was about 5-6% higher. From 230 on, I mean, the move began exactly at about 230. Price was 460. It's moved 40 rupees since then in the last 1 hour. So that's a really big move coming in on Honasa. I'm not sure there's any sort of any news, or I don't know if there's a business update or something, or with earnings around the corner. But clearly, that's a very large move that we have. But it's not just that; it's so much more. Which we are going to, which we'll wrap up for you as we kind of go on. Sudeep, great speaking with you. Thank you very much for joining us for now. And of course, we'll come to you in just a bit from now. We're just sort of starting to wrap things up here. So the Nifty ends at about 24,300, as I said, about 100 off the highs of the day. And I think you've got the Bank Nifty, which will come up on your screen. Never really went anywhere through the course of the day. Almost unchanged today. The small cap index is the other one, which I think has done much better than the Nifty, 0.5% gain on that one. And of course, then you've got the mid-cap index, which has done even better with about a 0.6% gain there. So it's not a bad session. It's a little quiet on the Nifty and the Bank Nifty. That's pretty much it. Rima.
Well, let's get to the sectoral movers. The top sectoral gainer today is pharmaceutical, with the Nifty Pharma Index gaining 1.5%. IT continues to see buying. The Nifty IT Index ends over 1% in terms of an up move, 4.3% in the first 4 trading days of the week. In CPSC particularly, it was the defense names. The Nifty CPSC Index also sees a 1 percentage plus point gain. On the way down, I think banks would be the only sector where you have a little bit of a red. Top Nifty gainers include Tata Motors. You've got IT names like HCL Tech, TCS, Infosys, ICICI Bank. Even though the Nifty Banking Index was flat, and that's because HDFC Bank dragged, ICICI Bank saw some solid buying, and that was up close to about 2.5%. Kotak Mahindra Bank giving it company too. And in the PSU lot, ONGC Coal India.
Well, that's right. Quickly, let's run you through a few winners. Mazagon Dock, as we said, 20% up. NBCC was up close to around 10%. You have Greaves Cotton as well. That was up close to around 8%. And Hoodco, no stopping that one. Up close to around 15% for the week itself. So quite a few of these stocks, they moved much higher. On the flip side, ITD Cementation smacked back. The stock ended with a cut of more than 10%. To be fair, in the final hour of trade, it pulled back close to around 4% from the low point of the day. A couple of other notable losers. Your Sri Lanka, that was down close to around 2% on large volumes. Bandhan Bank was moving well and it reacted to its numbers, so it fell on rather large volumes, down 2%. Well, on that note, we'll wrap up on this edition of Closing Bell. You don't go anywhere. Markets Forward comes up next.